If we take a look at the real cloud that's on the horizon, and this is what I really want to emphasize, and people aren't paying a lot of attention to it, it's the regulation that's going to take place. Something called the Dodd-Frank Reform Act was passed in 2010. It's a 2,300-page document, and it talks about 4 things: increasing compliance on lenders, oversight of the originator of the lender, restriction on loan officer compensation, and risk retention by the lender. There's a piece of this called the qualified residential mortgage, which is extremely important to you. And again, this is the Dodd-Frank Reform Act. Now, Chris Dodd and Barney Frank spent 20, 25 years building up the GSEs, and now they're coming through the back door and saying, I had nothing to do with it. We need to reform. It's kind of like the quote from Ralph Waldo Emerson: the louder he talked of his honor, the faster we counted our spoons. The qualified residential mortgage is very important because within this piece of legislation, and it's a piece of legislation that's mandated by Dodd-Frank, and there are 5 federal agencies that agree on what should take place. I don't know when the last time 5 federal agencies agreed to anything. The OCC, the SEC, FDIC, HUD, and Fed have opined that we now have to take a look at a couple things. Risk retention. If you're securitizing a mortgage loan, Fannie and Freddie, mortgage-backed securities, the lender will have to retain a 5% risk position if they don't adhere to certain guidelines. We want to have larger down payments, more skin in the game from borrowers. Think of the economic impact if we go back to a lending environment with a minimum of 20% down from the borrower. It will have a huge impact in the country.